Okay, this is the last panel's discussion of this day. We are about to conclude our today's journey. Now, this is the fourth panel discussion. Islamic finance is not static. It must evolve with global trends while remaining firmly rooted in Sharia principles.
Our final panel explore global trends in Islamic finance, value-based intermediation, maqasid al-Sharia, Fintech, and artificial intelligence. Moderating by Mr. Shahab Shahriar Khan, founder and CEO of 𝗕𝗏𝗪𝗀𝗧.io. And dear panelists are Mr. A.Q.M Safiullah, EVP and Head of Islamic Banking, NCC Bank, Professor Dr. Habeebullah Zakariyyah, Professor 𝗕𝗏𝗽𝗶𝗀, Mr. Mahmud Hossain, CEO and MD of Millennium, Sheikh Dr. Mufti Monzur-E-Elahi, Sharia Board Member, Bangladesh Bank, Mufti Ehsan Waquar Ahmed, CEO, Ehsan Sharia Advisor and Consultant, ISAC, Mr. Abid Azam, Head of Delivery, 𝗩𝗵𝗲𝗄𝐻 System Limited.
I would like to request Honorable Moderator to take the panel discussion to the dais. Mr. Moderator and panel discussant, now this session is for you, and the floor is now yours. Please join us on stage. Now, the topic is global trends in Islamic finance, value-based intermediation, maqasid al-Sharia and Fintech, and artificial intelligence. This session is going to be moderated by Mr. Shahab Shahriar Khan, Honorable Founder and CEO of 𝗕𝗏𝗪𝗀𝗧.io. We have another 7 panelists in this session.
Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome everyone to the final panel discussion of today's wonderful event. You already heard about very interesting topics like, in general, growth of Islamic banking, Sharia governance, and also a very wonderful discussion about the capital market, Islamic capital market. Now we have a fascinating discussion of global trends in Islamic finance. We'll discuss about value-based intermediation, maqasid al-Sharia, Fintech, and AI. And this is especially interesting because this helps us look to the future of Islamic finance. To give a quick introduction of the value-based intermediation, which a lot of you may not be familiar with, it's a value-based intermediation is a model that integrates profit-making with social impact, and it's becoming more and more prominent these days. And you already know that with the rise of Fintech and AI, these innovations are driving financial inclusion to underserved populations and really directly impacting lives and societies. In this panel, we'll explore how Islamic finance can leverage technology and how maqasid al-Sharia, which basically means the higher objectives of Islamic law, can help us be true to our objectives. And without further ado, we'll start with Mr. Mahmud Hossain, CEO and MD Millennium. So, Mr. Mahmud, first question for you is regarding the rise of technology in terms of AI and Fintech. How do you think we can help people with these new innovations, help them get more services, and also reduce income inequality in general.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Distinguished guests, my dear industry colleagues, and honorable participants, Assalamu alaikum wa rahmatullahi wa barakatuh. It gives me immense pleasure today to be able to talk about the AI and fintech, how it's going to have impact on our life, on Islamic finance, especially, particularly in augmenting and accelerating financial inclusion, delivering value-based impact, and reducing inequality. First of all, let's talk about how this AI and fintech is helping and can take us forward as well in the case of financial inclusion. Before we go into the details, let's see the current scenario. Presently, as study says that 43% of Bangladeshi population, adults, they don't have access to formal bank accounts. Whereas for the entire world, this 43% has the account, the rest doesn't have the account. Yeah. On the other hand, 72%, global average is 72%, they have this kind of access. So see the difference, okay? And what does it mean? I mean, how does it impact, our financial inclusion? See, because such exclusion that we can see, the around, we are talking about 7% exclusion. That kind of exclusion actually what does it do? It actually become a building, which is the building blocks of economic empowerment, the inclusion, and this exclusion is actually hindering us. Okay. Now let us see how to segment these issues. So to augment and accelerate financial inclusion, this AI and fintech has been in the country making phenomenal actually contribution. Although we need to go a long way, but we can see that through MFS activities and through things like agent banking, these are augmenting and actually accelerating the access to finance for the unserved people. Okay, but these are helping only to actually have deposit account, access to deposit account. But the crux is, what about financing? To make prudent financing, you need to have these unserved the citizens. We need to you need to find out, when you determine their credit worthiness, very important thing. And to actually determine the credit worthiness, AI-driven, data-based applications can help tremendously. And as you can, the result is, you can see the AI-based credit exploring and nano-financing. And it's just started in the country, although it's in nascent stage, but we can expect a tremendous improvement in near future. Okay. So, I mean, besides these things, AI can impact in the smart zakat, sadaqah, and at the end, I would like to draw your attention in another innovative way of leveraging this AI and fintech. How? Do we have any idea that we have huge amount of waqf estate lying around, and it is being in unutilized stage? Can you guess that how big is this waqf, estates, and how much income right now is generating, and how much income could be generated leveraging AI and fintech? Number one, in Bangladesh, there are 6 lakh acres of land, okay, available in the waqf state. Imagine the income through it, the way it's been handled through a governmental, management, is only yielding in a year approximately 60 lakh taka in 2015 and 16. But with the proper implementation of AI technology, with blockchain, with tokenization of these assets, usufruct, we can see a revolution in the country. Any idea? Any idea how much the income could be from this 600 acres of waqf, while utilizing that thing in a proper way using this AI technology by tokenizing the usufruct of it is possible only through utilization of 20% of this land, and if it is being utilized, developed properly using this AI-based technology, so the amount could be, can you guess how much per year? $1 billion. Not a matter of joke. Only 20% utilization of this waqf state. So this is the way,
Yes, sir.
how AI and fintech can bring revolution in this country, utilizing what we have right now. Thank you.
Thanks a lot, Mr. Mahmud Hossain, for the insightful talk. For the other moderators, we are really short on time, so we'd appreciate if you can keep your discussion within 5 minutes. And of course, we'll come back once we have covered all the panelists. Next, I would like to go to Shaykh Dr. Mohammad Monzur-E-Elahi, who, as you all know, is a prominent scholar in our country of Sharia. For the Sheikh, I have a question related to these innovations that Mr. Mahmoud just talked about. Whatever new innovations come up, how can we make those credible? How can we make sure that those are things that people can use with peace of mind in terms of Sharia and in terms of risk management as well.
السلام عليكم ورحمة الله وبركاته. الحمد لله والصلاة والسلام على رسول الله وعلى آله وأصحابه ومن والاه. The question was, what governance and practices can keep this innovation credible? There are so many ways. I think we should think of these ways, and I can give some example. For example, number one, we can reboost and reconstruct our Sharia governance, our Sharia supervisory board, ensuring that it is independent and it works well with full credibility and work with Sharia standards. Number two, by ensuring third-party auditing, for example, world-renowned or worldly recognized auditing firms, internationally recognized auditing firms, to ensure that there is nothing hidden and to ensure that everything is practice here in the institution is legal, clear, and there is no non-Sharia compliance practice here, and also not misuse of the fund. So this should be ensured to keep the innovation credible. And also Sharia compliant risk management should be introduced. Because there are so many risks with these innovations. First of all, we should ensure that there is no Sharia, non-Sharia compliance. And also we should ensure that there is no misuse of fund. By ensuring these 2 points, for example, we can make the innovation credible. So I think there are so many other ways. Also, our research unit can, explore some other ways to ensure that the new innovations are matching with Sharia. Sometimes, for example, AI technology. There are so many non-Sharia compliance with the use of AI, but it is not being explored. This is the cause that there may be some risks arise with non-Sharia compliance. So I think we should have another technical Sharia sector or segment which will make research on this field to ensure that everything is Sharia compliant. And in this way, I think the governance and the practices can be credible, inshallah. Thank you very much.
Thank you, Sheikh Dr. Monzur-E-Elahi, for the wonderful points. I'd like to next go to Mr. A.Q.M Safiullah, EVP Head of Islamic Banking at NCC Bank. My question to Mr. Safiullah is regarding Maqasid Sharia. So how do we turn Maqasid ideas into simple rules, into policies, sectoral policies that banks and investors can follow? And how can we also make sure that disclosures are made so that investor trust is preserved?
Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wal-aqibatu lil-muttaqeen. Thank you, moderator, and guest speakers, and all the audience. Assalamu alaikum wa rahmatullahi wa barakatuh. This is very important in the financial sector, Maqasid Sharia. What do you mean by Maqasid? It is aim, objective, etc., and so on, Sharia, as rules and regulations guided by Allah subhanahu wa ta'ala. It is a mandatory rules and regulations. A Muslim must abide by the rules and regulations as guided by the Quran and ahadith, that means traditions of the Rasul sallallahu alaihi salatu wasalam. Maqasid Sharia definitely emphasize preservation of life, faith, wealth, wisdom, and nasl. And it can be translated into three sectoral policies. Number one, exclusion of harmful industry. Definitely it is must to avoid all types of haram activities in a Muslim lives, so that he can spend his life for the satisfaction of Allah subhanahu wa ta'ala and also salvation of himself. Number two, innovation. Innovative product must be introduced with the span of time and to demand the current situation. It is also maqasid Sharia. Number three, environmental and socially responsible policy should be adopted for the development of the countries, for the welfare of the countries. This type of inclusion may maqasid as visible for the investors. Number one, like exclusion of haram business, such as to avoid haram sources to income, for income, haram sources to avoid. And the like and activity likely that are harmful to the society, to the human health, or to the whole nation, or to the for the whole mankind. Number four, transparency, which are very crucial. We must show, we must disclose all rationale for including, excluding any companies or any business segments. We must to say why this is Sharia compliant and why this is not Sharia compliant according to Quran and Sunnah. And if you go to transparency policy, we have to maintain corporate governance. We have to disclose our corporate governance. We have to maintain our transparency in reporting. And we have to clarity and disclosure in all respect, so that a Muslim can show, can play these total activities for obeying all the rules and regulations for the satisfaction of Allah Ta'ala. And maqasid Sharia is fixed, as Quranul Kareem says, وَكَذَلِكَ جَعَلْنَاكُمْ أُمَّةً وَسَطًا. Also said Allah Ta'ala, here Muslim Ummah is defined, Ummata Wasata, no east, no east. Right path should be followed. In another Quranic verses, Allah Ta'ala says, فَاتَّبِعْهَا ثُمَّ جَعَلْنَاكُمْ عَلَى شَرِيعَةٍ ثُمَّ جَعَلْنَاكَ عَلَى شَرِيعَةٍ مِنَ الْأَمْرِ فَاتَّبِعْهَا. Nabi, you are bound. Muhammad sallallahu alaihi wasallam, you are bound to play all the rules, to all the rules and regulations, to abide all the rules and regulations as guided by the Quran. So maqasid Sharia is very important in respect of social activities as well as in respect of economic activity. This is the achievement or goal or last end of a Muslim or Muslim Ummah. Thank you.
Thank you, Mr. A.Q.M Safiullah. I'd like to next go to Dr. Habeebullah Zakariyyah, who is a covering dean at IIUM, Islamic University of Malaysia. My question to you, Dr. Habeebullah, is how can we use value-based intermediation and also maqasid-driven banking products, and what would be the most high ROI products that delivered the real world impacts the fastest.
Bismillahirrahmanirrahim. Salatu wassalamu ala al-amin wa ala alihi wa sahbihi ajma'in. Thank you, moderator. I would like to thank the organizing committee and IFA consultancy. Of course, the audience, without you, there shouldn't be any panel. I regret that I cannot speak Bengali because I can see how the audience are very energetic whenever the speaker speak in your language. So today I regret that I cannot speak Bengali, but hopefully maybe my next journey I will try my possible best to learn some Bengali words, inshallah. Yeah. That's very important. Okay, I think to respond to your question, I need to bring all of us back to Islamic financial institution in general, as well as the size of Islamic finance. Currently, I think is more than 5 trillion USD, which expected that in 2018 and 2028 will be more than 7.5 trillion USD. So, but going deeper, zooming into the product that we have. As you know, we have different type of product. We have debt-based financing as well as equity-based financing. When we look at the equity-based financing across the globe, is less than 5%, whereby debt-based financing is more than 90%. What does that mean? It means that we are still within the debt-based financing. Okay, what's the difference between us and conventional? If conventional is more or based or focused on debt, which is loan. So the difference is not much. What makes us different is value-based intermediate and maqasid al-sharia. And that's, I think, what we need to focus on. We need to shift from being, quote unquote, focusing on legal part of Sharia to maqasid and value-based. When I look into the statistic in Bangladesh, we have more than 7.5 million SMEs. And out of this, we have more than 93% small enterprise. Okay. What does that mean? It means that these are the people that need our support. So in the banking sector, mostly we focus on profitability. We have to get profit. But we neglected underserved and unserved population. I think Mr. Mahmoud just mentioned in his presentation. What does that mean? It means that we need to focus on that segment. I think more than 90% of Bangladeshi population are under that segment. So what are the products that we can issue, we can offer in the market that we serve this segment? So one of these is mudaraba-based, musharaka-based for financing of those who are in SME sector. Of course, the training is needed to upgrade their skills, to know how they can have much on the market, to see the market and see how can they benefit from the market. The second thing is, of course, I know in the banking sector we don't want much risk, and when you look at the mudaraba musharaka based on the credit, we consider it is very high risk. But this is where takaful and micro takaful can play a very significant role. In the morning, we listen to the one of the panelists talk about the takaful, I think, which is very, very important, banking sector, takaful sector need to go together. Okay, we can start with micro takaful because as I said, more than 90% are under SMEs, and micro takaful can actually cover that aspect. Another aspect that I think we need to cover is sukuk. Sukuk with value-based intermediate. Recently, AAOIFI standard, they issue sukuk, they issue the standard on waqf-based sukuk. And recently in Malaysia, we are developing waqf sukuk waqf-based product. So this kind of sukuk can focus on infrastructure rather than business as usual. So our people in Bangladesh can benefit from this kind of sukuk, which is under waqf. I also want to draw our attention is that I think Prof. Kabir also mentioned in his presentation earlier that we cannot put everything under banking sector. We need to know our core business. In the era of Prophet Sallallahu Alaihi Wasallam, everything was okay without bank. So Islamic social finance is very important. And that Islamic social finance, including waqaf, zakah, this sector must be regulated. Otherwise, we are losing our identity as a Muslim. The bank is not our system, it's their system. And no matter how you want to develop it, you are restricted with certain maybe policy, set of maybe Basel 1, Basel 2, Basel 3. We are restricted.
Sorry, if you can please wrap up in 30 seconds.
Okay. At the end, I think just to wrap up, summary of mine is that we need to be very systematic in terms of introducing, offering products. We need to look into Islamic finance rather than Islamic banks. Finance is bigger than Islamic banks. And we also need to not only legality, but we need to actually focus on value-based intermediate. Thank you, Mr. Director. Thank you.
Thank you, Dr. Habeebullah Zakariyyah, Jazakallah khair, for bringing our attention to that important point, that Islamic banking is not necessarily always Islamic finance, and we need to think bigger. So I would like to come next to Mr. Abid Azam to bring on his expertise to discuss what partnerships or test environments or sandbox environments, you could say, we can launch or we can use to help good Islamic fintech ideas launch faster.
So I think I'm going to go more with like venture capital, because venture capital is more of my background. I'm from Silicon Valley, and most of the most famous startups started off in Silicon Valley. And the other aspect of that is the biggest companies in the US are essentially these startups. They're bigger than the older banks that started like hundreds of years ago. And they're starting to provide the same services. And I would say that the one advantage of Silicon Valley is there's a broad ecosystem and a well-established networks that contribute to fostering startups. And the interesting part of it is it follows Islamic finance in the sense that it's equity-based and like a shared risk model. And as others mentioned here earlier today, is that this is a great opportunity for the Islamic community to help each other grow And I believe if this model applied properly or in a larger portion than the banking system, it would allow more to rise and thrive. And I think one of the best examples in Bangladesh is 𝗕𝗏𝗄. And 𝗕𝗏𝗄 is like the only unicorn in the Bangladesh, which means like a startup that crossed $1 billion in market cap, and it's actually at 2 billion. And the other aspect of Bangladesh that I find interesting is remittance, and that that 30 billion is coming annually from abroad, and this capital can be redeployed or is being redeployed through individuals to their family and to like a broad spectrum of Bangladesh society. And this brings in aspects of fintech, AI that could be used, and it could be in an Islamic finance manner that could actually change the opportunities that are available. And I think there'd be a better future if we deployed modern technologies like blockchain, AI, and transfer funds to people that could utilize it, and actually they know how to best utilize the funds in a larger sense than I would argue than a banking system, and a banking system that's more asset based or limited in the ability to provide credit. And so I would use the models of like accelerators, angel investing, and foster a community that would encourage startups to grow and thrive.
Thank you, Mr. Abid Azam, for the wonderful discussion on startups and the VC ecosystem that goes hand in hand with the modern digitalization and also the digital products that we are seeing. I would like to go next to Mr. Mufti Ehsan Waquar Ahmed, who is the VC at Al-Ghazali University in Pakistan. And my question is, how can universities or academic institutions like Al-Ghazali University help students learn Islamic finance in a way that combines maqasid, value-based intermediation, and also align themselves with new technologies that are coming up in terms of AI and fintech? How can they be ready for this next wave of technology and innovation?
Bismillah ar-Rahman ar-Rahim. Thank you very much. I would like to thank the organizers, the AAOIFI consultancy, and the entire community for inviting me here and providing me with the opportunity. I would like to share some of my experiences, what we're doing there at Al-Ghazali and in Pakistan, what the different stakeholders are doing in order to address the community, the stakeholders, with the development that is happening on the technological side. At Al-Ghazali, we have been striving to bridge the gap between the two communities in the society. The one which is more towards Islamic education, going to the traditional Orthodox madrasas. We are trying to equip those students with the modern finance, what is happening across the globe, how finance operates in different areas. Although they are experts in Sharia, they know the jurisprudence, they know the fundamentals, and they're very well versed with the maqasid as well. But correlating it with what is happening today in the industry, what is happening across the globe, how technology has played the vital role, and talking about smart contracts and things like that. I have an opportunity to chair the Sharia board of a digital bank there. So things are quite different what was happening earlier. So that is very important, where you need to bring that fraternity and keep them abreast, make them aware how the transaction is actually happening. Because on a digital platform, things are quite different. And it makes very difficult for a person to understand that how the transaction is being executed. So that is one of the challenges which we foresee, and we are trying to bring that group of people close to the technology, make them understand how modern finance work, how technology is basically integrated into the operations today. The second group of people, those who are well versed with technology, they're well versed with finance, they're well versed with the modern education. But unfortunately, there's a disconnect, and they are not very well versed with what Islam says and what Sharia principles are, what the maqasids are for. So we are basically inviting undergrad students, even the postgrad students and graduate students, to do some special courses on Islamic jurisprudence, on Islamic finance. So with their understanding on the technology and integrating it with the Islamic concepts and the principles of Sharia and the maqasid in Sharia, they would be coming close, understanding the nature of Islamic finance, and then they can better interpret how Islamic finance should operate. So this is the two things what we are very aggressively monitoring, especially talking about the scholars sitting on the Sharia boards. That is also a challenge, because again, as I said earlier, they're very well versed with the jurisprudence area. They're very well versed with Sharia studies. But how the transaction and what are the basic operations like treasury products, like trade finance products, that is very different. And managing the liquidity, especially when you talk about in Pakistan, we are now striving to move towards converting the entire economy into Islamic finance and Islamic principles. So that becomes a challenge, and every stakeholder has to revisit his operations, his practices, and align them according to the Sharia principles. So the monetary policy, the central bank operations, that is also an area where the Sharia scholars needs to know how basically central banks intervene and manages the economic activities.
Sir, if you can wrap up in 30 seconds, please.
So these are some of the areas where we are trying to integrate both the knowledge segments and the group of people, what they basically need, conduct a TNA, and then devise courses and programs accordingly, so that can help them understand what the basic fundamentals are. Thank you very much.
Thank you, Mufti Ehsan. I'm very sorry, we are very short on time. I would like to last go to Mr. Kabir Hassan to please share your final thoughts on this topic of digital finance.
Bismillahirrahmanirrahim. I'm not going to really focus on digital finance because everybody has spoken very well. But let me just share some of my, since I dream about the future of Islamic finance in this country, just share my points on three different aspects: the trust, depth, and the purpose. Now, why I'm talking about the trust, we need to repair the moral foundation of Islamic finance in this country. Now, Islamic finance is not only a system of contracts, it is a moral covenant. Recent governance challenge in our banking sector have shown that many failures are not technical. They are failures of ethics, transparency, and accountability. If depositors cannot trust that their money is safe, if investors cannot trust our disclosures, if citizens feel finance is Islamic only in name, then the system loses its soul. And that is what is happening in this country. To rebuild trust, we must strengthen independent, competent boards, including Sharia boards, elevate internal Sharia audit, risk-based monitoring, and evidence-based reporting, ensure strict enforcement of compliance, because standards without consequences do not create credibility, embed a culture of amana, where every stakeholder treats financial intermediation as a public trust, not a private privilege. The second point, the depth. Building a full Islamic financial ecosystem is not only the banking, even the banking probably is 80% and water is 70%. We need to go to non-banking financial institutions like Islamic capital markets, strategic and well-structured sovereign and corporate sukuk, Islamic mutual fund, REITs and private funds, tax neutrality and standardized documents, ratings and disclosure aligned with AAOIFI and IFSB standard, takaful and retakaful, human capital development. We need to really revamp our curriculum and introduce full-fledged program in universities which are non-existent. Regulatory coordination is very important. We are working in silos. Bangladesh Bank, Bangladesh Security and Exchange Commission, NBR, Ministry of Finance, and industry must jointly draft a 10-year roadmap, like many countries does, covering sukuk pipelines, takaful framework update, Islamic banking asset quality, integration of AAOIFI standards, and incentives for Islamic fintech.
Sorry, if you can wrap up in 30 seconds, please.
Just final point. So that requires institutional alignment, not isolated initiative. So what I'm trying to say, that we need to have a shared responsibility. The future of Islamic finance in Bangladesh will be shaped not by one regulation or one institution, but by the daily decisions of people in the room, regulators who enforce standards, bank boards who choose transparency over convenience, CEOs who prioritize Sharia governance, scholars who balance facilitation with integrity, academics like me and trainers who build the next generation, and investors who demand ethical value. And if we can bring trust, depth, and purpose, then Bangladesh will emerge not only a participant, but one of the leaders in Islamic finance industry. Thank you very much.
Thank you to all the wonderful speakers. We heard some fascinating discussion about the value-based intermediation and rise in AI and fintech, and also how we can wrap this all together with our values. So I'm sure we could hear all night long to these wonderful speakers, but thank you again for all your time, and I hope we can make time for you again. Thank you.